Hey everybody, Ashley Page here. Thank you so much for joining us for our educational vlog this week that we do on Thursday. For those of you who are new to watching our educational vlogs, on Thursday we take a deeper dive into one solo topic that we feel like can help you prepare and protect your money. We're doing that today, and that's in compare and contrast to the portfolio vlog that the guys do on Monday that give you a broader market view for the week. And then on Tuesday, the research from our research partners we send out. So we're delighted to have you with us. And this is something we've been watching a little bit. Normally, when I do the educational vlogs, it's more of a overall economic subject or overall business consulting topic, because that's what I do for the firm. But today, I'm going in a little bit more to the planning area, where Mark Hume and Jason Hatley run that for us and do an outstanding job. But it's something that I had noticed with my own planning, and I thought you would share it with you. The title of our vlog today is to pay particular attention to your home insurance right now. And the reason that we are saying that, and we want to give you a heads up on that, is there's a definite trend going on right now for your home insurance to, at the same time, have less coverage but cost you more. You know, getting a little bit less but costing you more. Why is this happening? Most home insurance companies over the last 6-year period, due to storms, natural disasters, and inflation-driven labor and material cost, they've lost money. And these are all the large names that you know and probably use, and I do too. They've lost money for 5 of the past 6 years. Those losses are continuing this year through the first half of the year, and this information came out that we're sharing with you before the wildfires in Maui. Paul Newsome, an analyst at Piper Sandler that follows the financial results for insurance companies, says it really plainly. He said, these results for insurance companies are awful, his words, and not sustainable. So let's get into the numbers a little bit. Over the past 3 years, there have been $90 billion in claims that have occurred in the United States. That's by far the highest run rate in 4 decades. To give you a little bit of comparison on that, the decade of the 2000s averaged about $40 billion per year, and the decade of the 2010s averaged $54 billion per year. So this run rate we're seeing now is pretty much double what we've seen in a long time. The other point of emphasis that we want to share with you that's telling is beginning in early 2022, the beginning of last year, up until the midpoint of this year, you've had 31 state insurance commissions that have approved not only just rate increases, but double-digit premium increases. Frankly, it used to be when you got a rate bump like that, the geography was kind of centered in 3 places: Florida, Louisiana, and California. So it was sort of Florida, Louisiana, California thing. Obviously, it was hurricanes in Florida and Louisiana and the catastrophic damage there. In California, it's earthquakes and wildfires. With all of that sort of collapsing together, that's why these insurance companies are paying out right now, and have over the last 3 years, massive amounts. So what is our call to action for our clients that are listening to this today and hearing some of these draconian statistics? Elevate the importance of taking an in-depth review of your insurance and be clear about the cost and the coverages, both for your primary residence and particularly for a coast-based secondary residence. What's happening overall, sort of at the margins, is that insurance companies are in this mode of shifting more of the risk back to the homeowner in the form of higher premiums and not covering as much. And if we continue at a rate like that, they really have no choice. I'll be the first to admit that I've had a great insurance agent for over 35 years when my wife and I married. Still do. They've done a wonderful job. And because they do such a good job, when I get my policy binder, I have a tendency to sort of review the high points on it, kind of seeing what it covers on the house and what we're paying again this year and how that varied from last year. And I haven't been going, because I trust them and they do a good job, I haven't been going very deeply into the policy. I'm changing that this year, not because of who my insurance agent is, who is great, but this macro climate that is going on around it that is both pushing premiums up and tightening coverage. So when you're looking at this, we have an excellent planning team here at FiPlan headed by Jason Hatley and Mark Hume. Both of them would be delighted to assist you with such issues and to make sure that what we do is we accommodate this new world of insurance costs and coverages in your planning updates. So hope you have a great rest of the week. You all have been sharing these vlogs with family and friends. We really appreciate that. And as always, feel free to reach out to us on this topic or any other by any social media, or feel free to drop by and call us. Until then, have a great rest of the week.